Today I traded the Fed Jackson Hole Conference live, and we're going to break down the entire session, and I'm going to give you the tools and strategies that I use to go about determining which direction a market is going to head and how to trade in and around a major news event. As soon as we move to vertical, direction switches, right? And there we go. We just got the touch of MAs as we cross here. MACD's diverging further apart. We just formed a higher bar on a higher band. We broke above our MAs. We are now trading on top of our MAs. After 4 days of trading horizontal, we move from balance to imbalance. We are trading now vertical. You can see here how we've held above our mean. We're just trading and we're just going to run the top of this MACD up. Like our high tide at this point, like if you're sitting on the beach, like you better be all the way back in the woods because your towels are about to get wet, right? This market's going to move and we're going to see this move happen. And it looks like no one knows. But today, August 22nd, Friday, Fed Chair Jerome Powell speaks at Jackson Hole. Whenever Powell speaks, you know, there's going to be these economic events we're going to look out for, CPI, FOMC, and today is one of those days. We've got Powell speaking here in just about 15 minutes, okay, at 10 a.m. at Jackson Hole. So boom, market goes vertical into this event, which is actually interesting because sometimes if there's hesitancy in the market, people will tend to get flat, right? If there's a news event coming up or a big, announcement, if there's CPI, FOMC, these big market events, typically markets will get flat, but it looks like there's a lot of decision, right? Not indecision. There's a lot of certainty toward the upside, right? We could put it that way, where the current given price of SPY off the open was considered to be underpriced, right? So our open here at 637.76, the market decided that was an underpriced, share price for SPY off the open, if that's how you want to look at it or think of it. But you can see here as our bars just wicked up a little bit higher, we're now at our green band almost. MACD's super far apart. We have touched on our MAs here, which indicate that vertical move, right? As they came closer together, going into the open here, moving toward our 10 a.m. meeting at Jackson Hole, you can see how they got closer and closer and closer, right? So we kind of expected this. We kind of saw this, right? If we just measured based off of the last 4 days, how far our MAs had been apart, and then we saw them start to converge, that would have given us some indication we're ready for a vertical move. And then we look at volume and we could see, okay, that vertical move, right, was definitely, will definitely be to the upside, right? Because there's a lot of buying volume, right? But look at that. This is interesting. Okay, we got to keep an eye on our bands here because this is how we are going to know to make the best assumption on what we think is going to happen. So if our bars start ticking higher and we're forming higher bars, which means if we're moving higher, these are just, you could look at this, right, as candlesticks as well. Like we could make this a candlestick chart. It's a little easier to see with bars, but if I put candles on, right, the higher candles, 639.53, if we see higher candles on lesser bands, then we know things are starting to top out, right? If you didn't look at this, if you didn't have this as a tool and you were just purely looking at candlesticks, a higher candlestick will look like a higher candlestick, right? Because visually we could see it. We could see that it's charted a higher high based off the share price. But if we're using an envelope system like this, and these are all fib numbers that give us our envelopes, we can then see, and I'm going to revert back here to a bar, we can see even if we are forming higher highs on the day, if those higher highs are not being formed on higher envelopes or higher bands, that is indication that the move is starting to die out, right? That even though participants are continuing to jump into this vertical move, it is not sustainable, right? The move is not sustainable. Something can only move vertical, right? Whether it's SPY or another stock you're trading for so long. We don't know how long, right? But we know it's going to move from vertical to horizontal and we're going to come back into balance. So it's only a matter of time. And so as that mean stays relative to that price, right? As we continue to push higher, but even though we're pushing higher as far as the share price goes, as far as our candles go, our mean relative to the share price is moving up with that share price. So we see already here, we didn't just form a higher bar on a higher band. Now we got to give it a couple more 10-minute bars, but we now are slightly below our red band, which means we're very close to our mean. And look what happens on this top screen. We see a high at 639.72. You can look at that as a rejection off the top VWAP. You can also see we start to, see an influx of sellers. So we've got a little more selling volume coming in. Our MACD will more than likely start to come back to converge, diverge. We look at convergences and divergences. So the MACD was more spread apart, right, than it is right now, right? They're going to start coming together and getting a little bit closer. And right now, our two MAs that we use to measure balance are virtually on top of each other. So right now, the market's like, okay, hang on, I don't know what I'm doing. There's indecision. We've got buyers and sellers that are trying to decide what the actual mean price is going to be. What is the fair value behind SPY at this time? We're 8 minutes away from this huge news event. And so as I would say, as the minutes get closer here, we'll see the market kind of flatten out. We're going to see the market get a little bit more neutral, a little bit more balanced potentially, right? Those vertical moves are only going to last 15% of the time. That is not a lot, right? Relative to the 85% of the time we're trading horizontal. We should expect a vertical move after people get flat, after the market comes back into maybe temporary balance before that news event. This is a little weird here, seeing that we're already going into vertical before this news event has happened, right? So there is some sort of certainty in the market, right? Again, you can make assumptions on what that might mean based off of the event. Is that, does that mean the market is expecting a rate cut? Maybe that's what we're seeing right here. Based off of current price on SPY, if SPY is going up, if the market decides that off the open 637 was too cheap, what does that mean? I mean, it means probably that news is going to be positive and people would want to buy something at a better price, assuming that that price would increase. And the only thing that would lead that price to increase would be positive news, right? Maybe a rate cut. I don't know the probabilities, right? I don't know where things are priced in. I don't look at the fundamental side, but we can use all of these charts to have an understanding as to what is actually going on. And so this is a really great example heading into the open here today, or coming into the open, seeing that we started to move toward vertical, quick vertical move off the open here. Now we're starting to get flat. People are starting to kind of sit back as we anticipate this 10 o'clock meeting, and then we'll see which way the market reacts, right? And the best thing to do at this point, right, is going to be to keep an eye on the volume, keep an eye on the MACD. We'll see where our lines are in correlation to each other. If we start squeezing, getting tighter, if these levels start getting closer, keep an eye on our means, right? Our 8-day EMA, our middle VWAP here, right? So we're going to see what happens in a minute here. So what we just saw right now, right, as expected, as we move here into, we've got 1 minute left, market's starting to pull back, okay? We've reverted to our mean. What's important to note is that we did not go into full vertical. We got really close, right? We got really close to going vertical, but notice how our MAs, they actually didn't touch. They got really close. And if we want to wait for full confirmation of a vertical move, they didn't cross. They got really close. I said they touched, right? We are going into a vertical move. The vertical move did not happen. Now they're starting to diverge further apart. So we technically are still in a balanced market. We've reverted back to our mean. We've reverted back to our middle VWAP here, our mid-tide. We've reverted back to our 8-day MA. Again, we saw we didn't form a higher high, like a true higher high, right? That green envelope was not broken by our, there we go. Okay, so there you go. Now we're vertical. Look at the cross. News event, boom, like that. We just went vertical. Look how far apart our MACD is. Look at that. So market speeds just increased drastically. We saw a clear bounce off of our mean, okay? We saw a very clear bounce off of our middle VWAP, which is our mean. Blew out our upper VWAP. You can see here our bars. We've just charted a bar on our yellow band, right? And we got that clear cross. So we are in vertical, folks. This is when to not trade. So that is full confirmation of a vertical move. The market came back to its mean right before that vertical move, just like clockwork. You can see it there. The volume coming in very hot, pushing the market up. 643, okay? 643.22. MACD is diverging further apart. That was the most volume we saw all morning during the morning session. And like I said, if you're trying to trade a mean reversion strategy, if you think SPY is going to come back down to our mean, do not be fooled, right? We could continue pushing up all day, or we could just dive and drop and kill our mean and continue selling off, right, to our bottom VWAP. So we're in our 15%, right? The timer has started, this theoretical timer, because we really don't know how long we're going to be in vertical. But this is going to be 15% of the time we are going to be in this vertical move. So we just hit our purple band. We're now going to try to look at all of these things we look at, right? And we're going to try to figure out where is the market going to be exhausted. I know there's a lot of people right now, maybe you guys watching, that are getting involved in this move. You're getting involved in this vertical move because it seems like this is where the big money is to be made, which technically you could make a lot of money here, right? We use the analogy, if you go out fishing, like this is where you're going to catch that big fish, that big tuna, that whale, if you will. This is going to be that home run, but it's very hard to actually not just time the move, right? We could have got in, we could have gone long, but here's the hardest part. Now that the move has not happened, now that we're in the move, when do we get out, right? So we're going to use, this is the best time to use our bottom left system here, our envelope system with our fib levels. We're going to look at our bars, we're going to look at our bands, and we're going to see here, we're going to look at our volume, we're going to look at our MACD, we're going to keep an eye on VWAP, although VWAP right now isn't going to tell us much. We already know we're in verticals. So really this bottom left screen and bottom right screen are what we're going to look at. And we're going to see that even though the market seems like it's going straight up, even though we could be forming higher highs, if we do not continue to form higher highs on higher bands, that will give us a sign the market is starting to get exhausted. It's not that we're trying to call a top, but we're going to have an idea where things are going to start to fizzle out. Okay. Now I'm not watching the meeting. I don't even need to watch the meeting, right? All I need is this. All I need is the TA that is going to allow me to know what is happening right now. Realize how I did not enter any trades, right? We're not in anything this morning. So we're going to see now that we're in vertical, okay, we're going to wait and we're going to try to identify at this point a move back to horizontal. So from in balance, the market is not balanced right now. We want to see the market back into balance. So from vertical to horizontal. So far, our highest bar formed was on our purple band. We are sitting here. We can keep an eye on our volume. Obviously, this volume has just like exceeded our pre-market and especially even the first 30 minutes of open volume by, 3 to 5 times. And you can see how the MACD here, the VWAP here isn't doing us much good because that high tide, again, our low tide is going to be our bottom VWAP, our high tide is going to be our top VWAP, and our mid tide or our mean is going to be our middle VWAP. And if you use the analogy of an ocean, we go from high tide back to our mid tide to our low tide, and this ebb and flow, this cycle continues to play out, right? And that's going to be 85% of the time. Right now, we're not going to be expecting anything besides the potential that our high tide keeps pushing out further, and that the beach keeps getting wiped out, right? That our high at 644 here, even though prior to that move, right? This should have been a top, our VWAP here, but it was not. Our VWAP pushed higher and it's pushing higher and it's pushing higher. And now we're going to start to see hopefully we'll come back into balance, right? Today, we're going to keep an eye here on our MAs and see how far apart they get. Now that our yellow has crossed over the blue, we know we're in a bullish market. right? So we saw that, we talked about this earlier before. We saw this coming. I mean, let's be honest. We saw this coming. We were balanced for the last 4 or 5 days. We were trading below our MAs. We started coming into vertical prior, right before this news event. People got flat just for a couple minutes before, got our cross, went into vertical, that bullish, bearish to bullish move that we saw, very, very clear there. And now it's a matter of how long is this move going to continue, right? I think my approach to markets has always been base hits, and those base hits accumulate over time. And yes, you don't get the glory of catching the big fish, but you also don't have, I mean, if you, it's a great analogy. If you go out, fishing every day and you're looking for that big 8-foot, that big 8-foot tuna, right? How many days are you going to go out and come back with nothing? But if you go out fishing every day and you're just looking for, a couple bass, a couple salmon, how many days are you going to go out and come back with something? And so it's the same thing in the market. If you're a trader that's looking to capitalize on trading vertical moves, they only happen 15% of the time. Now, granted, you might catch the move, you might catch the fish, but can you actually keep it, right? Can you get it back on your boat and can you keep it? Now, that's the same as if you just bought calls, you just caught that move to the upside right now. But if you're sitting in here and you're looking and trying to assume when things are going to end, how much more can this market go out? If you are too late, right, you're going to give it back. So I'd rather come back every day with a bunch of small fish versus go out every day and then maybe eventually catch one and keep it. And so that's just a great example. Now, keep in mind, we're looking at the 5-minute, okay? We just saw our volume here, but we're looking at about half as much volume on this 5-minute candle currently. So are things starting to slow down? I mean, SPY's up 1.36%. This was a massive move. I'm sure you have FOMO looking at this candle. I mean, who doesn't? Look at that move. Our highs on SPY, 647.13. I mean, geez, we're sitting 0.5% off of highs. I think everyone right now is getting involved in this vertical move. But who is going to actually come back with something is the question. And you could see how, I mean, the VWAP just keeps pushing higher. Our upper VWAP keeps pushing higher. Our MACD, we're still pretty spread apart here. That just indicates, obviously, that the market speeds are increasing. I mean, this just on our MACD, right? Taller bar compared to our last bar, speeds are increasing on less volume. So when we see speeds increasing on less volume, that is one indication that things might start to slow down. Now, we're always going to come back into balance. We are always going to revert back to our mean. So it's just a matter of time before all this crazy buying and selling, everyone that is involved in the market right now decides, hey, this current share price on SPY, it just doesn't make sense, right? I'm not getting the deal I want, right? Our sellers are not getting the sells they want. Our buyers are not getting the buys they want. And it's another analogy. If you go to if you go to buy something on Facebook Marketplace and it's listed for $100 and you come in and you want 80, the seller wants 100, what are you going to agree on? You can only go back and forth so much and sit there in the parking lot before you decide, hey, let's just agree on 90. And so in that case, 90 is our mean, and the market's going to find its 90 here. And so we're just waiting. It's just a matter of time. I want everyone to look at this right now. So far today, right? Our bar that touched the highest band was this 644.41, right? 644.40. Look how things are starting to falter out a bit here. I'm trying to zoom in a little bit more. We are now trading just about equal to where we were at 10 o'clock when we went vertical. When we went vertical at 10 o'clock, we were trading on our purple band. Now we are trading on our yellow band. Our yellow band is lower than our purple band. So even though it may look like the market is just as strong, our candles are just as high, this is our first sign here that we may begin to start coming back into balance. If less people, which clearly less people have started to get, right? If less people stop getting involved in the move, we see that by looking at our volume. We've got higher price, so higher bars on lower bands. We've got our markets. This is like a great example of you need all these tools. We can see clearly things are starting to slow down, okay? By the volume, by our system here. But we just formed a larger bar on the MACD. If you're just looking at the MACD right now and you're looking at, in proportion to how far apart, how diverged these two lines were, it looks like we're going to continue going straight up, right? We just want to continue to monitor the situation to see if that's really the case. Volume is drastically dying down. You can see that. That's very clear. So, very clear by looking at our 5-minute bars, or 5-minute candles, right? 644.77. You see how our envelope system is moving around our bars. So yeah, we're kind of just sitting here. We're not trading. And that's kind of the biggest thing is we understood what was going to happen potentially based off of these tools we look at. We measured balance. We identified, hey, we definitely don't want to get involved in the market. So even by just understanding balance and imbalance, being able to measure if we're in a horizontal or if we're in a vertical market, you would have saved yourself potentially a lot of pain, right? By not being involved in the market right now. Yes, you could have maybe been on the right side of that move. You could have caught that big fish. Would you walk away with it? Maybe, maybe not. But in a lot of cases, I've seen that it's better sometimes to not trade. Okay, so we're looking pretty strong. We did move back down for a brief minute there to our yellow band, but it looks like if we can break this purple band, we did break above it. Keep in mind, we did break above our purple band back here. We still have not yet. Volume's getting very, very low. So there are a ton of people involved on this move. So the participation, is starting to dwindle down. And again, the more participation you can get, you're going to need that to push up price. That was just a crazy move. We're up 1.6% on SPY. Looks like we're starting to tap above. Now, we could continue to monitor what's going on here. What we're looking for, again, is just a sign that it is getting time for our buyers and our sellers to find out what that mean price is going to be. And our mean is also moving up. So here's another thing we can look at. As this blue line, I like calling these bands there's an envelope system, right? These are bands. This is technically, it's not a band. This is a moving average. This is our 8-day EMA. And so you can see where our 8-day EMA was relative to price off the open. So off the open here, right, we were trading around 637.76. Our 8-day EMA, which is our mean, was at that 637, 76, around that area. Our mean has now moved up. Okay, so now our new mean here is 640.37. So the other way you can look at this is when this market does come back, which it will. We know it has to. Right now, the most probable area that the market would come back to would be 640.37 because that is our mean. So based off of that, we can also use 640.30 and it's going to move, right? This is a moving average. 640.43, 640.37, let's say 640.37, 641.81. I like measuring our mean more with the fib numbers, right? These are fib numbers that are input into this envelope system. They tend to be more true and more accurate than just a generic VWAP. But we're also seeing here another potential area, right, is 641.79. And now we are trading on our yellow band, okay? We're trading on our yellow band. Now we're going to see here, this could be a really crucial moment. This is our first amount of, what we can see, right, just based off of the last 4 bars of volume. We've got sellers coming in, okay? So we've got sellers coming in, and that was our first lower bar on the VWAP since the announcement, and we just dropped below our yellow band, okay? So this looks like a high. It looks like the market's pretty exhausted here. It looks like we've got sellers starting to step in, try to get that fish on the boat. And we now at this point can see we've just reverted back to our green band. Now we want to pay real close attention to our MAs that help us measure where we're at. We're going to see what happens. We're going to see if we revert down to our mean or if we can hold this. And we're slightly under highs, right? We are 0.47, 0.5% off of highs. We were 0.25 off of highs. So at this point, it looks like volume has died out. We've got sellers, okay? You can see that pretty clearly there. Speeds are decreasing. Our lines are getting closer. We're moving back down to our middle EMA. Our mean is gonna, obviously has moved up significantly. Our mean here is 641.90, dropping onto green. And at this point, I mean, this fish, right? you better lock in those profits. You better be out of that move. That crazy vertical move we just saw, this would have been an indication right now. It's right. Take profit now or 5 minutes ago when we started to see things start to dwindle out, which would have just been the cross there, right? As we moved below, as we were essentially rejected off our purple band and we moved below yellow. Now that we're on green, it's definitely that time, okay? And then as especially at that same time, we saw sellers stepping in. First time our volume really was less, or our speeds were less. So horizontal to vertical, back to horizontal to vertical. 15% of the time we're in vertical, 85% of the time we're in horizontal. We would not have wanted to trade. That's why we didn't trade going into the, coming off the open, going into the event here. We identified, hey, we're potentially moving into a vertical market. We went vertical. Now we're waiting for things to come back into horizontal. They have not yet come back into horizontal, right? We need to revert back down to our mean. We need to see our MAs get further apart, right? Like they were before, and come flat, right? And when I say flat, it doesn't mean touch. Come flat means they are flat in correlation to each other. Like this one, can't draw here, is moving straight in a straight line. This one's moving in a straight line. This one's moving in a straight line. They're flat in correlation to each other. This is where they're not flat, right? They come together. They cross. You know, there's a lot of different descriptions of all of this and analogies, but hopefully you guys are starting to understand the whole premise of what's going on here. We should have already, this was a great example, I think, going into the event today of this whole system and how we can approach markets here. We're reverting right back down to our mean. Yes, our mean's higher, 640.97. We should see at least 641 here in the next minute or two, as we revert back down to our 8-day EMA on our envelope system. We're really close now at this point to our middle VWAP, but we are now, the market has flipped, right? We've flipped from bearish to bullish. So it'll be really interesting next week. And as we come back into balance here, then we can look to start taking some trades today. But that was the top, right? We could see that top there. And we knew, at least if we were trying to capture that vertical move, when to step out and not be involved. And you can only imagine right now how many people were buying up here. And so, I mean, look at it as, hey, we knew not to get involved because of this. XYZ, hey, we knew when to get out and to not be involved if we were already in the market. Imagine how many poor traders got involved up here and are down, right? How many people bought into this FOMO? They bought into this vertical move for it to just come back down. If you guys did enjoy this video and you want to learn more, I'll put a link in the description below to my mentorship group. Subscribe for more, and I'll see you in the next one.